Welcome back, watch fans. We have the official watch market update for you. Unbelievable, but true. We're going to be talking about really what is the future. I'm talking about what is the future for Rolex, Audemars Piguet, particularly prices, really where the market is heading, where we've been, and where we're heading. Now, might be a bit of a long video, but I'm going to tell you the reality of the market. Unlike these tomato cans and crayon eaters and pelicans out there that, they just yap. They don't know anything, right? Look, here's the reality. I make my living by predicting certain market trends and cycles, okay? I'm actually a #1 best-selling author on Amazon, not New York Times, but on Amazon, that's right. So, things related to the market. I'll tell you more about that later. Look, so I'm going to tell you where things really are, not all this nonsense about the watch market is dead. Now, I'm going to give you kind of a history of where the market has been, where it's going, and where we are today. Now, first of all, let me give you the good. Should I start with the good news? No, let me start with the background. The background is this: the modern watch market really started off, I would say, in the mid 1990s, early 90s. A lot of the Italian collectors were buying the Daytonas back then for like $500, $1,000 at flea markets. There was also watches. People weren't collecting wristwatches, right? They weren't buying watches. They were buying pocket watches still. That was the old thing. Or maybe Rolex bubble back, whatever, nonsense. Because again, these are people who started collecting, when they were 15, in the 1950s or 60s. Anyway, the real modern watch market, as we'll call it, started, I would say, circa 2004. Because we had the convergence of social media. You had the early forums, right? Those message boards, the forums about watches. So all of a sudden there was information out there. Information was out there. People all of a sudden could see, what information on what is valuable, what prices are, what is desirable, things like that, right? Mostly with vintage and things like that. Now, here we go. Now, so also at the same time, what you had was you had this convergence of information. At the same time, the manufacturers started doing better watches. Rolex started doing much better quality bracelets and cases. Right, they got rid of the jingly bracelets, starting the Turnograph, and then the Daytona, I believe, they moved on to. But the Turnograph was really the first watch which had like a solid bracelet and the hidden clasp. It was an unbelievable watch, right? And then they moved on to others. So now you had the quality really dramatically improved. Same thing with Audemars Piguet. What people forget is that Audemars Piguet watches in the 80s and the 90s, the 70s, they were really ugly. The dials were ugly. They were gray dials. They were very dull, very boring dials. In the early 2000s, they started doing much brighter dials, these silvery white dials, which were more vibrant, and they really played with the light, and they worked with the bracelet. So all of a sudden, the watch was a lot sexier, right? The overall platform was great, but all of a sudden, it's kind of like Ferrari, right? Like Ferrari, they're always beautiful cars, right? In the 80s, Magnum PI, but really, they were impractical up until maybe the last, 10, 15 years, when all of a sudden, with modern technology, they became much more reliable, much more comfortable, much safe. Everything just dramatically changed. And you could actually, use it as a daily driver these days, unlike back in the 80s or the 70s, right? It's the same thing with watches. Now, so you had this kind of new market developed in the last, from 2004 to 2000, I would call it 2012, but 2012 marked really phase 2, which was real social media, which was Instagram. That really turbocharged things. That's kind of the era that we're familiar with. And of course, prices started to lift after the recession. So 2004 to 2012 was kind of early stage of watch collecting. And then if you had the 2012 to 2022, which was, full social media era. And of course, by then we had, prices all of a sudden started taking off. Watches started to sell at premiums starting in 2017, 18, and we know where things went. Things, all of a sudden, watches are selling at 2-3 times the retail, especially with these stupid Tiffany dials, which is, by the way, complete nonsense. And here's the thing, guys. Now, my prediction is this: we've seen those. We've seen, when people say the watch market is dead, they're just saying that the premium is above retail have shrunk, and that is going to happen, right? My prediction is this. My prediction is that we're going to see over the next 18 to 24 months premiums above retail disappear, okay? Very few watches are going to be selling above list price. Very, very few, except for very hot new releases or whatever, okay? Because, again, production is increasing at Rolex. Rolex keeps coming out with new stuff, so modern production is increasing. And also, there is, people are the taste, the collectors are broadening out, right? So here's what's going on. Can you make money with watches? Yes, absolutely you can, okay? You absolutely can. If you buy the right thing, right? Now, and in my opinion, the right stuff is certain neo-vintage. We're talking about 1980s, 90s watches, early 2000s watches. Vintage, when I say vintage, I'm talking about 60s, 70s. Because I want stuff that's relevant to collectors that are, let's say, 35 to 40 years old. Whatever where they're going. So that's what I want to be buying stuff where those people are going. I don't want to be buying stuff that old people are buying, right? Because I want to be buying stuff that, people who are kind of entering the market going to find relevant. So I do believe that Patek 70s watches are going to be relevant for quite a while. AP also, some 50s stuff. Nothing earlier than that. Anything earlier than 1958 or so it's not for me. I think that stuff is those are like, old folks watches, really. So now, again, the premiums are going away, but the watch market is actually going to be bigger than ever. The watch market is a $31 billion market today. It's a $31 billion market, and it's growing. Now, here's the thing. Here's the bottom line for this video. The watch market is going to be bigger than ever within a few years. It's just like what happened with the dot-com boom. Does anyone remember the dot-com boom? So these dot-com stocks in the late 90s, they got ahead of themselves. They went bananas because people had these, prediction. They thought, wow, the future is going to be bright. All these great things are going to happen with the internet. And by the way, everybody was right. They were absolutely right. It just took a little bit longer. So, YouTube didn't come out until, I think, 2005, maybe. I think it was only 2005 where it started becoming somewhat mainstream. So that's about 8 years after the initial dot-com boom. Amazon went to the moon in the original part of the dot-com boom, but then it was $2 or $3 a share by 2003. Can you imagine how much money you would have made if you would have bought Amazon in 2003 and held it? So people were right, but anyway, the cat was out of the bag. The point is that the internet cat was out of the bag. Same thing with watches. The cat is out of the bag, right? All of a sudden, we have a new situation culturally. It's a cultural shift. You have a cultural mega shift where things are really very different than they were in the 1990s. In the 90s, when I bought my first Rolex, it's for the same reason most people buy the first Rolex, whatever it is, right? But nobody was really collecting watches. Like, I had 2 watches, I had 3 watches, but that was pretty much it. I wasn't looking at, why wasn't I buying more watches? Why it wasn't? Because I didn't have the information. The information was not there. I was not aware of what was out there in the market. If I was, I would have bought a lot of other stuff, but we didn't have the internet. We didn't have all those sites that we have today, right? Which you guys all take for granted. So all of a sudden, all this information creates market liquidity, transparency, depth, etc. That's how markets work. Information creates, market action. So the more information there is, the bigger the market becomes. And that is exactly what is going on now, what's happened in the last couple of years. So right now, you have a whole bunch of new collectors that have entered the market, and those collectors are going to start buying wide. They're going to be buying wide. So they're not just buying the basic steel Rolex. No, these guys are going to start going to vintage, neo-vintage, other areas. That's why, if I'm looking at it as an investor, I want to be positioned in areas where I think those new collectors are going into, okay, which is, I believe, again, vintage. I believe, when I say vintage, I'm talking about 60s, 70s stuff. The stuff I talk about in my videos that, a lot of you guys saying, oh, those are dusty watches. Oh, they're dusty. Yeah, I'll tell you about dusty. But look, there's a lot of money to be made with dusty, okay? I know, an associate of mine, a guy I've done business with in the art business. He bought a dusty painting for 50 grand, literally dusty, falling apart, and that painting sold for $400 million. He paid about 50 grand for it. No, I think 50 or 25 grand. It sold for $400 million a couple of years ago. That was the famous Leonardo da Vinci Salvatore del Mundo, or Del Mundi, whatever. Yeah, so this guy bought the painting. It was unattributed. It was kind of speculative as potentially. I mean, the guy was an expert on Italian paintings, and they thought this could be maybe School of Da Vinci, whatever. And they did some research, etc. They cleaned up the painting. It was restored like beyond whatever. Funny story. They tried to sell it to Sotheby's. They had it on the market for $100 million. Nobody was buying it. They dropped the price to $50 million, and then this guy from the Freeports, the French guy, he flips it to the Russian guy, Ryboyev, whatever, I forgot his name, and this guy, he flips it for $100 million, back-to-back transaction, risk-free transaction. He told the Russian guy, Ryboyev, that he was basically brokering it, making a few percent, whatever. No, he brokered it. He bought it for 50, sold it for $100 million that same, afternoon. And the Russian guy, here's the crazy part of the story. The Russian guy got crazy because, he resented the fact that this French guy made a little bit of money. God forbid somebody makes a profit. So he all of a sudden, out of spite, puts up the painting for sale, along with everything else he bought from the guy. Now that painting, the Da Vinci, was up at auction at Christie's, I think about 4 years ago. I think they had an estimate, I don't know, 80 million, whatever it was, right? It sold for $400 million. So this Russian guy, that out of spite, sold the painting. He basically made $300 million, right? He bought the painting for $100 million, sold it for $400 million, pocketed $300 million, and can you imagine how sick this guy is? Still ends up suing the French Freeport guy for the next 5 years. I think they settled it recently. Crazy people, right? But that was a dusty painting, okay? So there's a lot of money made in dusty old things. When I say, but these watches, so by the way, you guys that are, making fun of these watches that I show, these vintage Pateks, Audemars Piguets, etc., you're gonna be crying. I'm gonna be the one that's gonna be laughing, and I'm already laughing because these watches are up in value, but I'm going to be the one that's laughing, and you guys are going to be crying that you missed out on this opportunity that I've been telling you about. Anyway, back to where the market is going. So yeah, collectors are going into vintage. They're also going into independence, which is a whole other story, like MBNF, FP Journe, kind of. I guess FP Journe is independent, yeah, but MBNF really is the main one when I think of independence. And what else? Now, here's the other thing. The watches are really part of the culture now, okay? They're part of the culture. So you have a lot more collectors. There's a lot of information. So there's a lot more buying, a lot more volume going on, a lot more potential buyers for watches today. Again, the premium is, the hype part is gone. That's gone, okay? In my opinion, in the next 18 to 24 months, very few watches are going to be selling at a premium. The Aquanauts, the Nautilus, are going to be at retail. Okay, that's my prediction. Now, here's what's going on in the watch bidness. We have, again, I'm saying the watches are now part of the culture. Now, here's what's interesting, right? People who are very culturally attuned, guys like Jay-Z. Jay-Z just invested millions of dollars in wrist check. And Tom Brady invested in Chrono 24. Bernard Arnault, the guy who owns LVMH, Louis Vuitton, he's invested in, I think, Chrono 24 also, as well as a couple of other things. You have Michael Ovitz, the famous, well, a lot of you guys don't remember, Michael Ovitz was the king of Hollywood. Really, that was the guy. If you were in the 80s, every movie in the 80s, 70s, this guy made every movie in the 80s and 90s, every big movie. He invested a bunch of money into another company in the watch space. We got, Kevin Brady, Tom Brady, Kevin Hart. We got, what's his name? We got Jay-Z, we got Cristiano Ronaldo. By the way, forget about these sports guys, which are, by the way, they're very smart advisors. They're also very good business guys, a lot of these guys. Tom Brady's no dummy. You have Bill Ackman, the hedge fund billionaire guy. You see him on CNBC all the time. He's invested, I believe, in Chrono 24. You got Mark Lazary. He owns the Milwaukee Bucks, another big hedge fund guy. I think he's invested in Watchbox. Who else invested in Watchbox? A couple of other guys. Now, okay, why am I interested in this, guys? Why am I telling you this information? Two reasons. So, a lot of big smart money is going into the watch space because these guys are not stupid. That they know that the watch market is going to be bigger than ever over the next couple of years. Just like what happened with the .com thing, right? People thought, oh, .com is over, the internet is over. In the early 2000s, they all thought the internet was over. Those internet stocks had collapsed. They were down 99%, like Amazon. And then all of a sudden, the internet actually, people started finding useful things for it. YouTube, social media, all those other things. E-commerce became a real thing. E-commerce was around in the 90s. E-commerce was around in the late 90s, but it was difficult, okay? It was difficult, even for Amazon. And as soon as it became easy and everything else, it became more mainstream. By the way, these Pelicans, they have like 6-foot wingspans. 6-foot wingspans. It's unbelievable. These things are huge. Unbelievable, these Pelicans. Let's see this guy. Look at this. Wow. Unbelievable. Anyway, so there's a lot of money going into the watch space. Now, where am I going with this? Okay. Now I'm telling you where I know where the future is going because that's what I do. Now my business actually is in the stock market business. That's right. The stock market business. That's my day job. Okay. Now here's how you make money in the stock market business. You got to get in on the ground floor of the next big trend early, right? So it's funny enough, if you got in on, for example, .com stocks early, and I remember the first few IPOs that came out, all of a sudden the next one became the hot thing, right? For example, like with the Chinese virus, in 2020, in February of 2020, anything that was a pure play on COVID, those stocks went to the moon. But there was only a handful of pure plays in COVID. And then, of course, the category wide. Now, in the business that I'm in, I actually, had two clients that, that we were involved in, where those stocks increased 2,000%. Actually, two of them increased 2,000. One increased 2,000%, 20x, and one increased 5,000%, 50x. And by the way, I was actually deeply involved in those situations where that increase was, I should say, a lot of it was due to my efforts. So we had a stock that went from a nickel to $2.50. Why? Because it was a pure play on the Chinese flu. Now, so right now, you're going to have Chrono 24 and Watchbox. These companies just raised money at $1 billion valuation. Okay, they raised money at $1 billion valuation, and they are. I think one of them is going to be. They're going to try to go public, I believe, in the next year. Right? We're expecting one of them to go public because again, they raised money from institutional investors, and some heavy money. They raised, I think, north of $100 million apiece, and. By the way, there was a lot of investor interest in a pure play in the watch space, right? Because, it's a $31 billion market. Did you know that there is no pure play in the watch space? There isn't. It's interesting, isn't it? There's a lot of collectors, but there is no pure play in the watch space, right? Now, I'm thinking of it as a marketing person, right? Now, I would think that people are interested in getting a share, getting a piece of that watch market, right? There's either they're collectors or they're investors, etc. By the way, Watches of Switzerland is public in London, but it doesn't count because that's like they're like a retailer. It's a different business. It's more a retail business. It doesn't really count. Also, it just doesn't work. Anyway, so I believe there is going to be a massive opportunity for the first stock that comes out that's a pure play on the watch space. Okay, and stay tuned to this channel. I'm going to have more news for you on that. I'm going to have news for you on that opportunity coming soon. Okay, of course, nothing I'm telling you guys here is investment advice or a recommendation to buy or sell securities or any of that nonsense. So I want to be perfectly. What do they say that? I got to give you the full legalese here. We're not giving any investment advice or opinion, but I'm going to be sharing with you an incredible ground floor opportunity. It's going to be a ground floor opportunity. And by the way, if you want to make money with these stocks, you got to get it in on the ground floor, meaning like right away, like when something comes out. Not when it's already been overinflated and overhyped. Just like with watches, right? It's like, imagine if you got in on the ground floor of FP Journe, right? If you bought FP Journe at retail, 8 years ago, okay? Or if you bought Richard Mille, 10 years ago at retail. It's the same type of idea in the stock market, right? You got to get in ahead of the hype. It's like Wayne Gretzky. How did Wayne Gretzky become the world's greatest hockey player? He didn't chase after the puck. They asked him, how did you become such a great hockey player? He said, I go to where I know the puck is heading. You got to be positioned in advance of it. So, anyway, bottom line, guys, is this, right? The watch market is going to be bigger than ever. There's massive institutional money flowing into the space. You got the smart money. Follow the smart money. Bernard Arnault, Bill Ackman, Jay-Z, they're all putting money into the space. One of these companies is going to be going public. I don't know if it's Chrono or Watchbox, but one of those guys will be public in the next 12 to 18 months. And I'm going to have I'll have something to share with you. I'm going to have something to share with you in the next few weeks. Let's just say an interesting opportunity. And that's all I can say. By the way, nothing here is investment advice or buy-sell recommendation. Let me repeat that again, okay? All right, here's to your success, my friends. See you in the next one. Make sure you click the like and subscribe button.